am Dr. Aruna, Assistant Professor, Department of Commerce, Tirutangal Nadar College. Today, we are going to discuss about the topic financial services. I'll give a brief introduction about the subject financial services. So, as per this introduction part of the financial services, financial services is a services provided by the financial institution for the individual, for the borrowers, for the government, and for the various people. Before saying about the financial services, first we come to know about the Indian financial system. So, what is our Indian financial system? Our Indian financial system, which comprises of four things, that is financial instrument, financial institutions, and then financial market and financial regulation. These are the four components of the Indian financial system. Among this four component of Indian financial system, we are going to see about the financial services. So, as per this part of this Indian financial system, which comprises of various financial institutions, insurance company, pension funds, and various other aspects have been included in the financial system. So, it's a network of institution, instrument, market. And then we are going to see about the features of the Indian financial system. As for the feature of Indian financial system, it plays a vital role in the economic development of our country. Mainly this financial system and the financial services which give the economic growth of our country. So the second aspect is which mobilizes saving habit of the people, which encourage the saving and make the people to make an investments into the different company shares and the securities. So which generally guide the company for their growth. And not only that, the people contributed their capital which investors into the various activity which gave the economic growth of the country, which leads the economic development. And the next aspect is about the facilities. So now the financial institutions are providing the expanded services in the market. So as per this, which helps the investor, which link the investors, borrower, and also money lenders. So which helps to coordinate all the three. And not only that, it is also consists of various provision for raising the fund from the different sources. So let us see the various component of the financial system. So these are the four components. First thing is financial institution, second one is financial market, third one is financial instrument, and fourth one is financial services. So while we talk about the first concept called as a financial institution, so these financial institutions are divided into two, that is banking institution and then non-banking institutions. So let us discuss about the banking institutions. So what is banking institutions? All the banking sectors will be comes under the category of the banking institution. So the first concept is about the commercial bank, cooperative bank. These are the different form of the banking sectors in India. First, regional rural bank, foreign bank. So let us see about what is commercial bank, why it has been established. So it has been established to promote the commercial activity in the country. So various commercial activities are being promoted, and mainly this commercial bank has been introduced. The main aim of the commercial bank is to get the profit. The main motto of the commercial bank is earning the profit by providing the different sort of services to the people. And the second aspect is about the cooperative bank. So this cooperative bank has been set up by the group of people which generally established with the motto of rendering the services to the public by offering the services at a less price. And the benefit have been mass benefit have been provided by them at a less rate of interest to the public. So this cooperative bank is also be encouraging even the lower and middle income group of people to save more in the banking sectors. The third one is about regional rural bank. Especially this regional rural bank has been established for the purpose of providing the agricultural benefit to the people living under the rural area. So the people who have been involved in the agricultural sectors will get the benefit from the bank at a subsidized rate of interest. So they can easily able to get the micro and also medium loan from the banking sectors. And the last thing is about the foreign bank. This foreign bank will encourage the people to earn the, there is in exporting the goods and importing the goods from the foreign country and to the India. So this foreign bank generally help the country to earn the foreign exchange. So majority of the foreign exchange have been earned in India with the help of the foreign bank. So we generally help us to maintain the money value in the country. So our Indian money value has been raised just because of the foreign bank. And our Indian money value, the currencies, by backing up of gold and the foreign currencies, we can able to maintain the Indian money value in our country. And this commercial bank has been further divided into two, that is the private bank and the public bank. So the private bank will be generally promoted by the private sector. Two or more people or the individual person have started the banking companies for accepting the deposit and also for granting the loan. The next thing about the public bank are generally set up by the government sectors. So these are the two type of these two banks is also be provided the commercial activities in the country. Majority of the commercial activities in the countries are being promoted by the commercial bank. And next thing we are going to see about the non-banking institution. So all these non-banking institutions are, so generally they don't have the right to accept the deposit from the public, but they have the right to issue the loan, grant the loan to the public. So this non-banking financial company will never accept the deposit. Non-banking financial companies will be generally raising the, that is will be providing the loan to the borrowers. So these are generally involved in granting the loan by joining with the other financial institutions and granting the loan to the various individual and also business sectors. The next thing we are going to see about the financial market. Our Indian financial market has been categorized into two. The first one is unorganized sectors and organized sectors. So unorganized sectors in the sense that all the activities done by the pawnbrokers, itinerant bankers, intermediaries and all these things comes under the category of the unorganized sectors. Whereas in case of the organized sectors, we can able to see the two type of organized sectors are there in India. First thing is the capital market and second thing is the money market. So with the help of the capital market, easily, that is the company can able to raise the long-term fund. So either in the secondary market operation or in the primary market operation. So the secondary market operations are nothing but it's an operation have been shares or anything have been purchased with the help of the secondary market like stock exchanges are called as a secondary market. If any shares raised by the public from the secondary market, that is from the stock exchanges like Bombay Stock Exchange, National Stock Exchange or OTCI. So from the different source we can able to raise the fund is called as the, that is secondary market operation. So secondary market operation which helps the majority of the company to raise the capital from the secondary market. So money market is nothing but where the company raise their fresh shares from the public is called as a money market. So under that all sort of the new shares will be issued to the public with the help of the money market operation. So under this money market operation, we can able to raise all sort of the short-term fund. So under this primary and the secondary market is a place where all the new shares are issued to the public and raised. Under the secondary market, all the secondary shares have been issued and also raised from the public. Whereas in case of money market, all sort of the short-term loan can be raised with the help of the money market operation. So under the money market operation, The shares, there is generally the money will be raised with the help of issuing the bond, treasury bill and other thing. And next thing we are going to see about the financial instruments. So the financial instruments are nothing but it's an instruments are being offered by various financial institutions. So it may be in the form of fixed deposit, shares, or in the form of the insurance policies, and all these are comes under the category of the financial instruments. And next thing we are going to see about the financial services. So generally there are two type of financial services are being provided. First one is called as a fund-based services. Second one is called as a fee-based services. Whereas in case of the fund-based services, under this fund-based services, majority of the people, borrower can able to raise the fund in the form of the leasing, hire purchase, and then consumer credit, bills discounting, factoring. By all these ways, the fund will be raised by the borrowers from the financial institution. It may be raised in the form of the loan or in the form of the credit. And not only that, they'll also be raising in the form of the, instead of purchasing an asset, they can purchase asset with the help of the hire purchase on the credit basis. And not only that, discounting, factoring activity, these are the various activities are being promoted with the help of the fund-based activities. So whereas under this fund-based activity, all the financial institutions are providing the fund to the borrowers. So either helping the borrower to raise a fund or otherwise helping the borrower to raise an asset with the help of the fund-based activities. And the next one is called as a fee-based services. So under this fee-based services, so here the bankers or the financial institutions, by getting some percentage of commission or brokerage, they'll be rendering the various sort of services to the borrowers. That's called as a fee-based services. So under this fee-based services, the first sort of fee-based services is issue management, merchant banker, credit rating facilities, stock broking activities, and all these things are being provided by the borrower. So these are the overview of our Indian financial system. So next thing we'll go see about the role of financial system in the economic development. So our Indian financial system will be providing the various sort of development in our country. So the first thing is about saving investment relationship. Generally this sort of the financial institutions accepting the deposit from the public and investing the deposit amount into the various company shares and securities. They encourage the public to save the money into the different form of the savings. It's called as a saving investment relationship. The second thing is about the growth of the capital market. So due to the expansion of the capital market operation, people, instead of investing the money into the bank, simply they'll be trying to invest the money into expanding their investment. They wanted to expand their investment. So due to that, they'll be investing the money into the different company shares and the securities. So this concept is called as growth of the capital market operation. So under this capital market operation, two sort of fund will be provided. The first thing is fixed fund and working capital. So fixed capital will be provided to purchase the long-term assets, fixed assets mainly. And second thing will be working capital fund is provided for the purpose of raising the day-to-day activities in the organization. And next thing we'll see there's a Indian financial system help in raising the capital in different form like foreign exchange market and fixed capital, working capital. Fixed capital helps to raise there is a fixed asset of the company. If they wanted to purchase any sort of fixed asset, they can able to easily raise the fixed capital. And the working capital is raised to meet the day-to-day requirements of an organization. And next thing is foreign exchange market, which is also brought the drastic change in our Indian economy. Mainly this foreign exchange market enable the banker and other financial institution to borrow and also lend the money in the foreign currencies. So if you wanted to buy any raw material, we can even able to easily purchase the raw material, and also we can able to sell the goods to the other country with the support of the foreign bank. If they'll be lending the money in the domestic currency and also in the foreign currency, so which helps the investor and also which helps the company to raise the fund and also to produce the product whatever is required by the people in the country. So the next thing we are going to see about the next role of the Indian financial system is government securities. Even the government of India is in need of money, they'll be raising the money from the capital market or in the money market, or by way of different way of raising the fund. Why? Because the government income is irregular, but the expenditure of the government are regular in nature. So to meet this expenditure, the government is in need of money. So whatever the money required by the government will be raising the money only with the help of the financial market. So either by way of issuing the bond, government securities and different thing, treasury bill, bond and all issued by the government for raising the fund. And next thing is infrastructure and the growth. Generally, the financial system is not only providing the support for the productive sector, even for the service sectors. So many infrastructural activities have been developed in India with the help of the financial services. And next thing is about the economic liberalized policy adopted by the government, which gave the way to the government that is giving the power to the private sectors, and also to the equal right will be given to the private sectors and public sectors. So even the foreign investors have been increased in India because of the liberalized policy adopted by the government. And the next thing is about next role of the Indian financial system is trade development. This trade development is the commercial bank activities have been developed in India mainly because of the Indian financial system. And not only that, now the financial sectors will be providing the fund by different way, like different credit facilities are being provided by the financial institutions in the way of encouraging international trade by pre and post shipment finance and fund. And letter of credit will also be given to the importer for importing the goods on the credit basis. Next thing is about the employment opportunity. So where the capital and secondary market activities have been expanded, we can able to see that employment, more industries established in India. Due to the establishment of more industries, we can able to find out more development in the employment opportunities. And the next concept is about the venture capital companies. These venture capital companies are providing the finance for raising the fund from raising the fund for starting the new business. So under this venture capital, generally this venture capital investment, we can able to see that majority of the financial institutions are investing the money into the new venture, new business, new innovative ideas have been financed by the venture capital companies. So instead of funding the money in the form of loan, there is two or more financial institutions joining together, and they'll be ready to make the investments for promoting the new innovation in the India. So these venture capital companies are promoting new innovative ideas in our country by establishing the new project, by making the investments into the new project. And next thing we are going to see about the balanced economic growth. So we can able to see that there is a balanced growth in the rural, urban sectors and primary, secondary, tertiary sectors. All three sectors have developed just because of the financial institutions. So many financial institutions are set up in the rural area, urban area, which promoting all the three sectors: primary, secondary sectors, industrial sectors, and also the tertiary sectors. So we can able to find out the drastic development in all three sectors because of the financial institutions. And the next thing is we are going to see about the financial services. After this Indian financial system, which lead all these, which providing all these growth to our Indian economy. Among this Indian financial system, the major component of the financial system is the financial services. So this financial services are the services provided by the various financial institutions to the individual, and also they'll be providing the financial support to the companies and various sectors, which help them to raise the fund and to do the business and also to do various activities in the country. Even a common public can also able to raise the money to buy any sort of goods, whatever they require in their day-to-day life. So this financial services have been providing the that is a major source of fund in the India. So they'll be providing the various sort of fund for the different activities in the India. So under this types of financial institutions, these are the various type of financial institutions which provide the financial services for promoting the various commercial activity in our country. So the first thing we'll see the banking and financial institutions. So various commercial bank, what we already seen. The second thing is about house building society, which helps the people to buy the house, buy the loan, and by getting the housing loan, they can able to even construct the house, or they want to buy the flat, they can able to purchase with the help of this house building societies. They'll be ready to provide the financial support to the public to buy the house. And the next thing is insurance company, which protecting the life of the individual, and also which give the support, financial support from the various loss faced by the individual and also by the companies, by offering the different type of the insurance product like life insurance and also the general insurance. Life insurance which cover the life of the people. General insurance which give the protection to the business sector by offering the different policies for the business sector. And next thing is about the investment trust and mutual fund, which help us to make the diversified investment. So instead of making the investment into one particular sector, we can able to make an investment into different sectors with the help of the investment trust and the mutual fund. So the diversified investments are possible with the help of the mutual fund. So we'll be purchasing the different units from the different companies. So out of that, even if we face a loss in one company, we can easily able to earn a profit from the other company. So mutual fund generally which gives the there is more benefit to the investors, and the investment in the mutual fund is also be safe and the secured. And next thing is about stock exchanges, whereas primary market and secondary market operation, where we can able to purchase the shares and securities from the different companies. And next thing is about the leasing company, which help us to lease the fixed asset. So if we wanted to buy any sort of the fixed asset above 20 crores, no company can able to hold the fixed asset more than 20 crores. If any company wanted to purchase an asset more than 20 crores, the company can able to get the support from the leasing companies. They can, instead of purchasing the asset, they can able to lease an asset and use the asset for the production. And so which helps the company to abide the rules and regulations of the government. And the next thing is about unit trust. And even under that, we'll be making the investments into the different units, and they'll be offering the fund for the various financial support for the various activities. Then the financial companies. So this financial companies will be providing the different sort of the financial support that is to the public and also to the business sectors. And then these are the various objectives of the financial services. So objective in the sense that we can mobilize the resources. Second thing is mobilization of resources means anyone, individual, business or anyone, if they want, they can able to raise the fund easily with the help of the financial services. Second thing is assist in the decision making. So generally which helps the investor where to invest, how to invest, and also which company to be invested. And so these decision can be taken easily with the help of the financial services. And next thing is skillful services. And skillful services in the sense that the financial services which is investing into the various skillful activities in the country and which helps the country to earn the economic growth and the development. And next thing is about economic stability. So our Indian economy has been boosted just because after the liberalization with the help of the financial services. And last thing is regulation. So all these financial activities have been regulated by the government out of their regulating authorities. For each and every activity, there are different regulating authorities are there, and these regulating authorities will be controlling over all the financial sectors in our country. And the next thing we are going to see about the nature of financial services. So the first nature is it is intangible. Why? Because we do not know about the that is we cannot able to see, but we can able to enjoy the facilities. Second thing is customization according to the need requirement of the customer. They can able to raise a fund. And the third thing is risk management. As per this risk management in the sense that various risk management companies have been established which is helping the financial institution to make the investments into the various activity which help the guide the finance, that is where to invest and how to be invested. And next thing is, last thing is regulation. So the regulatory authorities are very transparent in their services. So due to that, people feel very safe and secure in making the investment and enjoying the benefit from the financial sectors. And next thing is about the scope of the financial services. So the financial services is including many things. Many aspects have been included under the financial services. Whereas the first case is banking services, investment services, banking services which encourage the saving and providing the loan and encouraging the credit facilities in the country. And the second thing is investment services. Investment services like portfolio investment. So we'll be know that where to invest and how to be invested. And so that is for portfolio investment. Investment now majority of the investment is made by the public in the mutual fund activities, and security trading companies are there to make the investments into the shares and the securities. And the next thing we are going to see about the insurance services. So under this insurance services, there are life insurance will give protection to the life, general insurance which give protection to our properties, and the last one is about the health insurance which give the benefit to the public for overcome from the sickness by getting the financial support from the institutions. So this insurance companies will be providing the services to the public for the various activity. And next thing is asset management company will be generally guiding the banking sectors for making the investment. And so there is where the asset have to be invested, how the asset have to be managed. So many asset management companies have been established in India mainly for the purpose of managing the asset of the banking sectors. Various banking sectors getting the benefit with the help of the asset management companies. And next thing we are going to see about the corporate finance. Corporate finance is generally provided for the purpose of expanding the business activities. So many business activities have been expanded in India with the help of the corporate finance. And next thing is real estate finance. And real estate finance is providing the financial support to the various loan and commercial properties and finance. And all these things planning, financial planning services, different sort of services are being provided by the financial service sector. So the financial service sector activities are generally be wider and vast. Next thing we are going to see about the player. There are different players are there in the financial services. They provide the financial services to the public and also to the business sector. So the first thing is about the banking sectors. So the banking sector encourage the saving and also the saving and also checking the helping the accounts getting the loan amount, and not only that, even if you wanted to mortgage any asset or anything for our personal use, we can able to get the support with the help of the banking sectors. So first major player of the financial services is the banking sector, and second one is the investment banks. So investment banks are generally encourage the people to make the investments into the different activity. So the saving of the people nowadays have been invested into the different company shares and the securities. They'll encourage the people to save the money not only in the form of deposit, even they'll also encourage the people to save the money into the different company shares and the securities. And next thing is about asset management firm. So generally this asset management firm have been playing the major role in the mutual fund company and also pension fund companies and also hedging the fund. Why? Because this asset management company helping them to manage the asset into their various activities. And next thing is private equity firms or improving them to sell them to the profit. And last thing is about the pension fund, which encourage the people to save the money in the earlier stage and get the benefit after their retirement. So the old age people can able to get the benefit with the help of the pension fund companies. And the next player is the fintech companies, that is the company which encourage the financial activities, technical activities, technology. So they are ready to provide the financial support for the technology is called as a fintech company, financial technological companies. So these financial technological companies are generally encouraging. They use the technology like digital banking and also lending, payment and everything. All the activities are being rendered with the help of the technology. So easily any customer can able to get any benefit in a few minutes. So easily they can able to transfer the fund, they can able to raise a fund, and even if they wanted to start any sort of the highly technological business, they can able to start with the help of the fintech. And next thing is about the stock exchanges. So stock exchanges which facilitate the buyer to make the investments into the different stocks of the various companies. And next thing is about the credit rating agencies. So this credit rating agencies which give the rating to the individual and also to the companies. So based on their ability. So they will be providing the fairness. They will give the financial fairness to the investors. And next thing is about the central bank. The central bank which provide the, that is a major bank. Central Bank of India is RBI. So the RBI is having the all control about the finance. So especially the note issue will be done only by the RBI. So the central bank in India is the Reserve Bank of India. Reserve Bank of India is having the power to issue the currency. So every time of note issue, the Reserve Bank will back up the gold and the foreign currencies to maintain the Indian money value. Next thing is about the venture capital firm. Digital banking. So the digital banking is nothing but the banking facilities are being run through the online. Now majority of the banking sectors have been started doing their business only with the help of the digital banking. So why? Because they will be providing the different sort of the digital schemes to the investors and also to the public to make the investments and also to transfer the money, to raise the fund, and everything can be done nowadays through the online basis. And so this sort of banking activities are called as online banking services are called as a digital banking. And next thing is about venture capital firm. So venture capital firm always used to provide the financial support to the startup companies. They'll be providing the financial support to the all the newly started companies with the there is a new risky project and the new innovative projects. And next thing is about the mortgage and also the mortgage lenders or money lender. They'll be providing the loan and also helping the customer to buy the properties easily. So these are the various sort of the players providing the different sort of the financial support in the India. And next thing we are going to see about the that is one of the major player in the financial services is a merchant banker. So this merchant banker will be providing, they are not accepting the deposit from the public, they are not lending the money to the public. Instead of that, they will be providing the two sort of support is called as a banking services plus the consultancy services. Banking services in the sense that they won't provide the loan. They don't have the right to provide the loan, but they'll help the company to raise the loan from the, from the different banking industries. So they'll be helping the money lender and also the investors, borrowers. They'll be coordinating all the three. These three activities done by the merchant bankers. So the merchant bankers are financial, they will be called as a financial intermediary. They will be helping the company raise the capital, and not only that, by issuing the securities to the public. So as per this merchant banking services, they not only help them to raise the capital, they also be providing the advisory services. So the advisory services rendered by the merchant bankers are the advisory services in the form of corporate finance, merger, acquisition of a company, reconstructing the company, and by adopting the new project. So they'll be giving the basic guidance to the business sectors to establish the business or to expand the business. So the merchant bankers are not doing the merchant banking activities. Instead of that, they'll be arranging the fund for the public, and also they'll be providing the consultancy services. That's why it is called as the banking services and the consultancy services, which helps the business sector to raise the fund. So whatever the fund is required by the business sector, they help them to raise the fund, and also they'll help the business sector to formulate the new plan for their organization. So these are the two sort of the services have been rendered by the merchant banker. And next thing we are going to see about the different that is activities have been performed by the merchant banker. So the activity, like first thing is about the corporate counseling. Corporate counseling in the sense that for the corporate sectors, business sectors, they'll be giving the counseling. How to raise a fund, when to raise their fund, and not only that, which project which give more benefit for them. Why? Because they'll be dealing with the day-to-day life and all the other activities, and they'll have the coordination with the banking sector, they have the coordination with the business sector, they have the coordination with the individual. So due to that, they can able to grab more information, and they can provide the information to the corporate sectors. And next thing is about the project counseling. So as per this project counseling, they'll be giving the investors to select the suitable project for their business. And next aspect is about loan syndication. So if any organizations are require the loan, they'll be helping them to raise the loan, and there is if one banking sector is not willing to contribute the loan, they'll be helping them to get the loan from the different banking companies. So if the value of the loan is more, means one banking sector will hesitate to grant the loan. So during that time, the merchant banker will arrange the loan from the different banking sector, and this aspect is called as a loan syndication. And next thing is issue management. Issue management in the sense that they will be helping the organization in managing the new issues. And not only that, issuing, so on behalf of the company, the merchant banker will issue the shares for the various company. So this concept is called as a issue management or the underwriting activities. They'll underwrite the shares and securities of the various company and offer the shares and securities to the public. And this sort of underwriting activity is also be done by the merchant banker. And also they will help the investor to make the investments into the portfolio activities. And merger and acquisitions are possible with the help of the merchant banker. The merchant bankers will be providing the consultancy services in case of the merger and the acquisition. And next thing is foreign currencies finance. So they will arrange the foreign currencies if any borrower is in need of the foreign currency. If they export the goods or if they import the goods from the foreign currencies, they'll be helping them to raise the foreign currencies. And the next thing is about the working capital finance. So if any organization required the working capital finance, that is especially to meet the day-to-day requirement of the organization. So the day-to-day expenditure of the company can be raised with the help of the working capital, and this can be raised easily with the help of the merchant bankers. And next thing is bills discounting. Bills discounting is if any of the goods are being sold on the credit basis but the seller is in need of money for the production. During that time, they'll approach the merchant banker for discounting the bill. So the merchant banker will arrange the financial institution to grant the money and also to raise the invoices before the maturity date. When the maturity date comes, so the money will be paid by the customer directly to the financial institution. So this activity is called as a discounting of bill. This is also be possible with the help of the merchant banker. And next thing is about the venture capital. So already I insisted about venture capitalists making the investments into the new venture or new risky project. And the innovative project have been encouraged by the merchant banker by arranging the fund. And the last is lease financing. So the merchant banker is also be providing the lease financing activities like helping the company to lease the asset from the leasing companies. So as I already tell, if the if the asset of the company is more than 20 crores, they cannot able to purchase a new asset. So during that time, they'll be getting the support from the leasing companies. So this sort of support is called as a merchant banking. And next thing is about venture capital. So whereas the venture capital is generally providing the exchanging for the equity ownership, and they'll be helping the company in raising the fund easily. And this venture capital provided by the investor early stage, different stages of finance will be provided by the venture capital company. The different sort of finance like finance like seed stage, startup stage. Seed stage of capital is provided before the incorporation of a company. At the time of generating the ideas, the venture capital companies are providing they'll be getting the support. So there is initial stage, that is before incorporating their business, for formulating the new ideas, they are in need of money. The money can be raised in the form of the seed stage finance. And the second stage of finance is called as a startup stage. So after registration, so the fund that is especially for developing the product, and also for development stage, so idea generating stage. This stage is called as idea generation. So they'll be gathering the idea for the new product, developing the new product. During this stage, the next sort of finance will be provided is called as a seed stage, startup stage. Next thing is called as a early stage finance. The early stage of finance will be provided at the time of the penetrating the growth stage of the business. After the initial stage of establishing the product, when the product gradually touch the peak stage, that is the growth stage, they'll be getting the financial support called as a early stage finance. And next stage finance is expansion stage. So during the time of expanding the business from one activity to another activity, from one product to another product line, they'll be getting the financial support is called as a expansion stage. The last stage is called as a exit stage. So during this stage, under this stage, whether they wanted to, aim is to exit from the company. Why? Because the people has got exhausted in using the product. So they wanted to shift the product from one product to another product. The last stage is called as a exit stage. So these are the stage of finance is called as a exit stage finance. And next thing is regulatory bodies of the Indian stock market. The various regulatory bodies are there in controlling the financial activities of our country. The first one is the Reserve Bank of India, whereas is a central bank which regulate our Indian currency. Second one is the pension fund which regulating the pension activities in our country. And the third one is Security Exchange Board of India which regulate the stock market operation in our country. And then Association of Mutual Fund which is controlling over all the investment trusts. And next thing is about IRDA, Insurance Regulatory Development Authorities. So these are the various authorities which is providing the regulatory, that is activities. Last one is Ministry of Corporate Finance. So these are the various regulatory bodies in our country. So these next thing we are going to see about that is credit rating agencies. Whereas credit rating agencies have been established for the purpose of providing the rating to the individual or to the business sector, and that is especially for the business sector to raise the loan. So this rating agencies which gave the rating in the different form like AAA, AA and A, and all these ratings are generally which reveal the characteristics of the company, and this rating may be provided in the different form. The role of credit rating agencies is first role is assessing the credit worthiness of the individual and by the company. Second one is providing investment guidance, and the third one is facilitating capital market, and the next one is about the influencing the borrowing cost and enhancing the market efficiency, then regulating compliance, so regulating the various and then last one will the controversies of the companies or about the individual. So these are the various criteria will be taken by the credit rating agencies, and role will be performed by the credit rating agencies to give the rating to the various individuals and also to the companies. And as for this, major credit rating agencies are there in India. Three type of credit rating agencies: CRISIL, ICRA, CARE. So these are the three different credit rating agencies are there established in the India. So CRISIL will be providing the rating for the risk and also policy advisory services are being provided by them. Second one is ICRA, and ICRA is Investment Information Credit Rating Agencies which is offering the rating to the corporate finance and public sector undertaking. And the next thing is CARE, and Credit Analysis and Research Limited. They'll give the rating evaluating the corporate finance and government debit instruments have been regulated by the CARE rating agencies. And so these are the various credit rating agencies are there in the India. So the rating given by credit rating CRISIL is started by CRISIL AAA, which means that high safety for the investors and also for the lender for lending the money to the companies. Second one is CARE. Similarly, the ICRA will give ICRA AAA and CARE will give CARE AAA. So the AAA means which is highest safety for the lender, and the AA means high safety for the lender, and A means adequate safety on the investments, and triple B means moderate credit risk. They have to take some credit risk if they lend the loan to the particular companies. The double B which giving the moderate default risk, and CRISIL B which is high default risk, and C is very high default risk, D which is default risk. So these are the various type of the rating has been given by the credit rating agencies. And last thing is about the factoring. So the factoring services which is mainly provided by the financial institution, and for the purpose of whether the company sells its receivable invoice, based on the invoices or outstanding debit, we can able to get the money from factoring services. So they will be providing the loan on the invoices, not in the form of the loan. They'll be accepting the invoices and granting the money on the invoices. Later on, when the maturity date comes, they'll borrow the money they'll get the money from the buyer. So the first activities performed by the factor is So there is a seller will sell the goods to the buyer on the credit basis. So what the buyer will do, the buyer is ready, promises to pay the money after few months. But seller is in need of money. During this time, what the seller will do means, the seller will hand over the invoices to the factor and they'll get the money from the seller. That is, get the money from the factor. So later on, they'll be transferring the ownership to the factor. So there is a factor will be intimating the buyer that they have to pay the money to the factor. On the date of maturity, the buyer will settle the money. So what the benefit will be enjoyed out of this factoring means, the seller can able to get the money in advance and they can able to invest the money into the business activity for expanding the business. And buyer can also able to enjoy by way of selling the goods on the credit basis. So this activity is called as a factoring activity. And next concept is about the next thing we are going to see about the mutual fund. So we will be making the investments into the diversified activity is called as a mutual fund activities. So the main object of that is a mutual fund is diversification. We will be making the investment into different securities, professional management, affordability, liquidity, and then the income generation. So all these things can be enjoyed with the help of the mutual fund. So the mutual fund is a diversified investment. We'll be making the investments into the different unit. So there are various functions are being performed by the mutual fund like pool. There is resources. Pool is common fund is called as pool. Second one is investment management can be done by the mutual fund companies. They'll be planning and making the investments into the profitable sector. Second thing is liquidity management. They'll be providing the money to the investors whenever they required. Easily the investors can redeem the money. And next thing is risk diversification, dividend and capital gain. And then finally the regulation and the transparency. So this activities is regulated and transparent with the help of the RBI. So the RBI has given a power to the SEBI to control over all these activities. And next aspect is about the portfolio of the mutual fund. So the investments of the portfolio will be made into the equities, debt instrument, money market instrument and hybrid fund. So hybrid fund is called as a equity debt balanced fund or called as a hybrid fund. So these are the various sort of the investments will be made by the mutual fund companies. And mutual fund companies are being provided in the form of three: open-ended fund, close-ended fund, interval fund. Open-ended fund in the sense that there is no end for open. Anytime we can enter the market, we can buy and sell the shares and security. Second thing is close-ended. So the fund can be bought only at the fixed time, and it can be, that is buying and selling is done only on a specified time is called as a close-ended mutual fund. Last one is interval fund. So this interval fund is a coordination of both. Open with the account will be open for certain period. Then there is there is a fixed end will be given for the buying this and selling the shares and securities. So the three type of the mutual fund will be offered. Open-ended means anytime we can buy and sell. Close-ended means there is a fixed time is there for buying and selling the securities. Last thing is interval fund. There is a mixed combination of open. The share will be open for fixed period, and then the stipulated time there will be closing. Will be done. Periodical basis, the buying and selling will be done by the buyer and seller is called as a interval fund. So these are the three type of funds. So is a brief introduction what I give about the financial services. Hope you can able to understand the basic concepts of the financial services. For the students' point of view, this financial services you have to give more importance to the component of the Indian financial system, and then you have to study about the various type of the player of financial services, mutual fund and factoring, and all these topics whatever have been covered today is more important for your examination point of view also. Hope you can able to understand all these concepts. Thank you.